Hello everybody, today we will talk about such an important historical event in the world of finance as a Black Monday, 1987. Some people automatically confuse this term with the Black Friday. If you would like to become familiar with the financial markets and to make your analysis more deep and conscious, historical events and economic cycles have highly value for it. So, for better remembering, let's find out. Regarding the Black Friday, historians believe the name started in Philadelphia in the mid-1960s. Bus drivers and police used Black Friday to describe heavy traffic that would clog city streets the day after Thanksgiving, as shoppers headed to the stores. Businesses, however, didn't like the negative tone associated with the Black Friday name. In the early 1980s, a more positive explanation of the name began to circulate. According to this alternative explanation, Black Friday is the day when retailers finally begin to turn a profit for a year. In accounting terms, operating at a loss, losing money, is called being in the red, because accountants traditionally use red ink to show negative amounts or losses. Positive amounts, profits, were usually shown in a black ink. Thus, being at black is a good thing because it means stores are operating at the profit, making money. Regardless of when a retail turns a profit for the year, it's clear that Black Friday is a very important day for most retailers. What is Black Monday? Black Monday occurred in 19th of October 1987, when Dow Jones Industrial Average lost almost 22% in a single day. The event marked the beginning of the global stock market decline, and the Black Monday became one of the most notorious days in financial history. This event not only affected the United States, but quickly spread throughout the world. In Australia and New Zealand, the day is also referred as a Black Tuesday because of the time zone differences from the United States. Let's take a look on Financial Times Stock Exchange Group chart at the days. Financial Times Stock Exchange Group, also known by the nickname of FTSE, is an independent organization. It's similar to the Standard & Poor's, which specialized on creating indexes offering for the global financial market. All of the 23 major world markets experienced a sharp decline in October 1987. When measured in United States dollars, 8 markets declined by 12 to 29%. 3 by 30 to 39%, Malaysia, Mexico, New Zealand, and 3 by more than 40%, Hong Kong, Australia, Singapore. The least affected was Austria, a fall of 11.4%, while the most affected was Hong Kong, with a drop of 45.8%. Out of 23 major industrial countries, 19 had a decline greater than 20%. Worldwide losses were estimated at 1.7 trillion USA dollars. The severity of the crash sparked fears of expanded economic instability or even a reprise for a Great Depression. So, what is Dow Jones actually? One of the several stock indexes created by the editor of the Wall Street Journal and the founder of Dow Jones and Company, Charles Dow. The Dow Jones or Dow Jones Industrial Average was one of the earliest stock market indexes and is often used as an indicator of the performance of the USA stock market. The Dow Jones Industrial Average, not to be confused with the Dow Jones Transportation Index, which was the first index commonly called the Dow, includes 30 industrial stocks. However, in recent years, the USA economy has become service-oriented and the indexes have undergone changes in the composition of its stocks. It now has a little to do with industrial direct investment. The first variants of the indexes appeared in 1884 and covered the stock prices of 9 railroad and 2 industrial companies. This version of the index wasn't published and was used for internal analysis. The original index include American Cotton Oil Company, American Sugar Company, now Domino Foods Incorporation, American Tobacco Company split in 1911's, Chicago Gas Company, Distilling and Castle Feeding Company, General Electric, Laclede Gas Light Company under the name Spire Incorporation, National Lead Company, now NL Industries, North American Company, Tennessee Coal, Iron and Railroad Company, Leather Company, which ceased to exist in 1952, Rubber Company, renamed Uniroyal in 1967. It is calculated by adding the closing prices of all included stocks and dividing a result amount by a divisor which is calculated in a certain way. Like all the other indexes, Dow Jones is expressed in points, not dollars. The Wall Street Journal is responsible for the formation of the 30 most important companies in the United States markets. Now we may see an actual list from 2020s. As you may see, there are the most influential and powerful industrial giants in the list. It is easy to understand the value of Dow Jones Index. So, in October 1987, Dow Jones, the most influential index, USA stock market has been growing since 1982. In 1986, the fast recovery growth of the USA economy has begun to give way to slower expansion, which led to a soft landing of the economy and lower inflation. By early 1987, it seems to market participants that the economic recession has been avoided, and the US economy was on the verge of the boom. Stock market began to rise at the rapid pace, peaking in August. Dow Jones Index bubbled from 1985 to 1987. The potential causes of the crash are considered to be program trading, illiquidity, market overvaluation, and trading psychology. These reasons are used in attempts to explain why the crash occurred in October 19, why the market fell so quickly and so deeply, and why the crisis affected not only on the United States. The most popular explanation is the use of software trading. In software trading, computers are used to automatically execute arbitrage and hedging trades. In the aftermath of the crash, many market participants criticized trading strategies based on blindly following market conditions and short trades during a falling market. Short trades is selling borrowed securities and buying a similar amount after the price fell. Another popular theory is that the cause of the disaster was inconsistency in the monetary policy of the Great Seven countries. The USA, wishing to support the dollar and curb inflation, made two rapid changes in monetary policy without coordinating them with the European countries. The Securities and Exchange Commission formulated new rules for the protection of individual investors, in particular Nasdaq market makers were obligated to purchase a certain number of shares from them if they wanted to sell them. How may we see from the chart, a restoring process didn't take so long. It would be rather useful for you to check by your own chart and to observe economic and index recovery. as a history have cycles. Human race face with the irritations and depressions all the time. That is hard to stay fearless and conscious while widespread panic. However, all we know that information is a power, and while someone lose, somebody make profit. I wish you to be the second one. Keep going, master the necessary knowledge, and stay wealth. See you soon.